Peter Rose, Longwood Currency Trading. It's middle of August of 2021, and do you trade Forex fast or quick? I've been involved in karate and the martial arts now for it's over 50 years. I started in 1968. And in karate, I teach the difference between being fast or being quick, and understanding which ability the student has determines their success, literally, of their training years later. And I use these same principles in defining my own process of trading, the trading plan, I guess you'd call it, when I started looking at the Forex market as a tradable vehicle. That was probably 2012 or something like that. 2007, I found the markets, and I really approached them as a software engineer and somebody who has a physics degree and a lot of math background. I originally approached these markets as an academic exercise, a technical exercise, writing computer simulation codes and all that stuff against the market. So the question becomes, do you trade Forex fast or quick? What the hell does that mean? In martial arts, maybe you can understand that fast or quick movement. In fact, as an aside, I just remembered I had a video that I did in, I think it was this year, this year, of me showing the difference between being quick and fast to my 25-year-old grandson, who's pretty quick himself. And so I'll just paste in that video so you can see physically what we're talking about when somebody's, whether they're fast or whether they're quick. Quick is quite a bit different than just being fast. I'm quick. So we'll just take a look at the video and you can see the difference between somebody who's fast and somebody who's quick physically. Stop me from touching your nose. Okay. You got to remember, I'm coming from here. Yeah. And I'm moving up to touch you. That's right. You just try to do that. Okay. 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 So it's best out of 5 because I'm old. Okay. Okay.
Can I back up like that? Can I, or just
do anything you want? Well, I got to get closer there if you're gonna back up.
Wow.
I think I've had 3.
At least I got, what is that, 3 blocks?
Yeah, pretty good. Pretty good.
Well, I hope you enjoyed the little video. But I think you see, I'm 72 years old, and he's 25, and I got my hand down at my side. So you can see that difference in somebody who's just fast as opposed to something that's quick. So how do you equate that or relate that all to trading and in money? Well, it's a matter of when you say you're trading, do you trade fast or do you trade quick? Well, what's the goal of trading? It's to make money. So are you making the money fast or are you making it quick? The key to the thing is that you're actually making money, okay? I mean, you could lose money quick or you can lose money fast. That happens too. But let's look at the positive side of it in making money. I mean, the negative side is, you know, they say, you know, the fastest way to make $1 million, it's to start with $4 million and open a restaurant. Okay, so, and you know, in trading, 90% of the traders lose 90% of their money in 90 days. I mean, that was a statistic that came out as a result of a study of a major Forex brokerage firm that did an analysis of 43 million of their client transactions. So we're not just pulling that stuff out of the air. And there are reasons for that. Why people lose money and when they get in Forex trading, and why they would lose money opening a restaurant. But how do you make that money quickly? I mean, we're in a vehicle. Like, I spent 40 years in real estate investment. It didn't take me 40 years to make $1 million, and I lost $1 million net worth twice in my career, and was able to make that back. It took me 10 years each time because I didn't lose the asset base themselves, the real estate. It's just that all the equity evaporated. You know, the stocks, bonds, and real estate income, which was the bulk of my money, just evaporated. $1 million, gone. And then it took 10 years to have the normal appreciation and the positivity toward the economy to come back to reestablish that value. So we do the same thing in trading, right? We make some money, and then you lose a little, and then you make some. Hopefully, you lose less than what you make when you make it, and that you make it more times than you lose it. And when you make it, you make more than what you lose. All those kinds of things. So how do you equate the fast and the quick with money? Well, let's make it real easy. If you took a starting balance of $100 and you added $100 every year to the account, and your account was making 30%, and you did that for 10 years, you'd have $1,047. So you've put in, over 5 years, every month, you're putting in, or every year you put in $100. So you've invested $500, and you get back $1,547. So that's fast, but it's not quick. Okay, so now for quick, if you took $10,000 as a starting balance, and every year added $10,000 to the account, and it was making 30% over 4 or 5 years, you'd have, instead of $1,547, you'd have $154,700. So, was that fast? Yeah, that was fast. Was it quick? Yeah, that was quick. The difference between the fast and the quick is the amount of money that you end up with at the end. It's the same compounding. In other words, if you look at my video that I did of me touching Graham's nose, it was the same physical movement. It's just that there was that extra special juju that I learned from my teacher in karate when he introduced the concept of fast and quick to me, because I didn't really, I said, well, fast and quick, what's the difference? And he did that to me. I thought, holy fuck. And he says, and then to demonstrate how off I was, because I was young, 23 years old, and I was wired up and very fast. And he said, in karate, he said, just go ahead and punch me as hard as you can in the chest, and I'm going to have my hand here like this, and I'm just going to block it as it comes through. Well, in karate, you're going to block something, particularly from a big guy. He's punching, you're going to bang. You're really going to slam it. And so that's what he did to me first. He said, I'm going to touch you in the chest, and you block it. And I just, as fast as I could. And then he said, well, you do that to me. You think you're so fast, you do that to me. Just touch me in the chest, or punch me in the chest. And man, I cranked on him. And he had his hand up here like this, his fingertips. And as he came in, he just went, psst, and he just tapped my arm. And it swole up. I actually dropped to one knee because it hurt so bad. And my forearm swelled up. I couldn't move my hand for about 10 minutes. And he goes, that's quick. So in money, you can be fast in growing your money. We all know that money grows faster if you compound it than if you just do simple returns. Now, I'm not a fan in trading of compounding, because I think it makes your trading confusing. And if you get into trouble with the compounding, it just makes the shit much worse for you. And you have all these mental gymnastics. Let's see, I had a $10,000 account, and so I could buy one full lot. Now I've got $10,500, so I could buy 1.1 full lots, and then I make another 500. Well, I can buy 1.2 full. It's just you're supposed to be trading, not making calculations in your head. I just keep it simple. If you're really smart and you can do the compounding on the fly, that's love you. Just go ahead and do that. What I do in compounding is that if I have a $10,000 account, when I have $20,000 in my bank, I trade another account, or at least whatever the margin is. I could split the margin then, because I'm successful. I know I'm successful, so I could just trade a little bit over margin requirement and not risk losing a lot or going to margin, because I've got the buffer of the other account balance there. So I don't have to actually double the account to trade that second lot. I just have to have at least made the margin. So if margin is $5,000, I'll then trade 2 lots, because I've got $15,000 that I've made. So then I'll trade 2, and that's compounding. But I do it not on a daily or a trade basis, doing all those mental gymnastics. It might take, in order for you to get a 50% increase in your bank, that might take you 2 months or 5 months, or whatever it is that you're doing. It might take you all year. That's a safe way to do it, and that's compounding. Now, if I have a $1,000 bank and I do that, then I'm defining that as fast. If I have a $100,000 bank and I'm trading 10 full lots instead of the 1 mini, now I'm doing it quick. I'm doing the same thing, you see, but I just have more money. In karate, you do the same thing. It's just that you have just this little bit difference of training and thinking about what you're doing that makes you do things. Instead of being fast with them, you become quick with them. And so the question that I have to ask you is, do you understand the difference between making money fast or quick? And what is your ability level? I mean, these are questions that I ask somebody that calls and wants me to work with them. I work with very few people because I ask really tough questions, because I don't want to work with 100 or 1,000 people, because my time is more valuable to me than whatever amount of money it is that you could pay me. Yes, I was listening to a video last night from Alex Hormuzzi, who's very successful. He's, I don't know what he's worth, $30-40 million. His business is doing $80 million a year, and he's on track to do a couple $100 million. Was about people calling him and offering him $10,000 for an hour of his time just to help him out. And he goes, I just can't get distracted. I can't take my mind off the ball. $10,000 is a lot of money, but when you've got a lot of money, you don't need $10,000. It doesn't make any sense, because it's not worth my while to do that. I'd love to help the person, but I got to help myself first. And so when you are looking at your trading, if you do this compounding and stuff the wrong way, you end up taking your eye off the ball by trying to do something that you don't have the capability of doing right away. And so the question of is your trading fast or is it quick, is you have to learn. If you're going to learn from somebody like myself, you're going to learn how to do it fast, but you're not going to learn how to do it quick until you've gone through a tremendous amount of work to show that you're ready to do that. I mean, we trade with a $1,000 account until you get consistently profitable before I turn you loose to trade $10,000 or $1 million or whatever it is that you've got to bring to the table. If you're a multimillionaire, I'm not going to let you trade more than $1,000 until I'm sure that you really understand what you're doing and that you're going to be safe with it. I thought I understood it when I started. I'm a millionaire. I had the money to put into it. I did all my analysis and stuff in a simulated account with a $40,000 balance, because that's what all my computer simulations were based against, because there was some staging that I wanted to do, and so I had $40,000 so that I could do the staging, and I had dry powder and all the other crap that you have in a trading plan. And I was very successful in the simulated account in doing that. But I wasted years practicing in a simulated account, because once I got into the live account, I really didn't catch that all the education that was going on out there didn't teach me how to really trade. They taught me what to do, but in a certain degree they showed how to do it through stupid indicators and all that crap, because they don't know how to teach. But when to do it, nobody teaches you when to do that. And so it didn't take long for me to shit that $40,000 out, is gone. And so I had to step back from that, and that's where I looked at my martial arts training. I said, look, I excel at everything that I get involved in because of my martial arts background. That's taught me discipline and organizational skills in my 33 years as a senior software engineer, how to break complex problems down into the small, simple composite pieces, and solving them and then organizing them. Well, what am I doing that isn't consistent with what I know I should be doing? And as soon as I saw that the educational system that I had been following and that I had been believing in was flawed, I said, okay, I've got to go into best practices here the way that I understand them, or the way that I know them. And one of those best practices was, you better for shit know the difference between trading fast and trading quick. Because if you don't know that, the derailment that you can have, along with the other misinformation that's out there, will take your account to the wood. And it's just not necessary for you to lose $40,000. You know, if you take $1,000 account and margin is $500, you've got $500 to play with at $1 a point. To have to reload that account, $500, to get it back up to 1,000, you'd have to lose 500 pips. Now, coming out of that simulated environment, I was trading mini lots. I traded 2 mini lots live, and I lost it. So, you know, effectively, it was just stupid. It was letting trades run. It was cutting winners short. It was all the stupid shit that I knew you shouldn't do, that I thought, because I had been successful in the simulated account, in overcoming, wasn't feasible in the larger account, because there are so many of my principles that I've used in software engineering and in karate that you don't bring to bear and you don't need in the simulated account. But when you get into the real live account with real money, with real people on the other side, it's a whole different thing. You know, it's like a guy saying, "I'm a crack shot. I can shoot the apple off a tree stump at 100 yards. Boom!" And I just, no way you'd want me shooting at you. And the instructor looks at him and says, "Yeah, but can you do that when there's somebody shooting back at you?" That's the difference in the currency trading between simulated market and the real market. There ain't nobody shooting back at you in the simulated market. You can delude yourself into all kinds of fanciful things. If you trade in a simulated market for more than a couple of weeks, you're out of your fucking mind, because you're not learning anything. Once you learn how to use a trading platform and the general mechanics of it, you're done. Get out of it and put your money at risk. But don't put more than $1,000 at it. And please don't trade with $100. It's not going to happen. If you can't pull $1,000 together to trade these markets, then you don't belong in them. Why do you think that if you go into stock trading, they force you to have an account of $25,000? Because they're assuming that the dumbasses, the fragmented people, can't come up with the $25,000, so they're not going to lose. So your failure rate in stocks is less than what it is in the currency markets, because the price of entry is so little, The leverage is higher, the volatility is greater, but that's more opportunity if you know what you're doing. You know, I quoted a 30% return. Why would I quote a 30% return? You can't get 30% anywhere. Well, yeah, you can. In the Forex market, you can. And guess what? In real estate, if you know what you're doing, you can get more than 30% return a year. It's a fallacy that you can't get high rates of return if you know what you're doing. And of course, there's some caveats that go with that. I'm not going to get into that now. All we're talking about is once you become consistent in your trading, then you are able to go into compounding and a lot of these other things and do it fast. But don't try to do it quick unless you really, really understand the difference in being fast as opposed to being quick. Because if you're successful as a fast earner, you may very well go to the wood by trying to be quick if you don't know what you're doing. Peter Rose, Longwood Currency Trading. Have a great day. Have a great trading day.